Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. We can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. A little late here this morning. Sorry, I was just having a little bit of issues with Rhythmic here. I think I got everything sorted out, though. I think I like accidentally started it twice or something like that. We got some numbers coming up right here. New York Fed manufacturing negative 1.5 versus an expected negative 12.9, so that's good. Initial jobless claims 213 versus 217, so that's good. U.S. retail sales spot 3 versus an expected negative 0.1, and where is the core retail sales? Core retail sales month over month negative spot 3 versus 0. So that is a little bit mixed, but none of those numbers are huge. I think that we should just sit here and see how the market reacts to this. Some of my charts are being a little slow here, so just kind of let things settle, all right? So far, the treasuries are buying, though, pretty aggressively. We are higher than we were yesterday, too, so. Okay, some big volume at 24, and they're bouncing off of that. Yeah, all of my charts and stuff are still calculating, so let's let that settle. Easy week to lose money the easy way. Ooh, you made some money on UB, huh? That sounds impressive. That thing sure does move. Okay, looks like they're extending above 24 now. Gonna restart my Ninja workspace. So I'm not quite loading. It was the only one that looked bullish. Oh. That's because you're getting this really extreme flattening, right? So the way this is, the way that it's tended to be going, of course, you get a particular news event and the yield curve could steepen. It changes all the time, but most of the time right now, it's been flattening, which means that if you're going to take a short, you want to do it in the 2 and the 5, and if you're going to take a long, you want to do it in the 30 and ultra 30, right? For some reason, this particular Stream Beats song has been mastered a little bit louder than the others. Or it seems louder than the others to me. What's per Bitfinex? So it sounds like the Ethereum merge went through last night, yeah? Bitfinex says proof of work proponents in disbelief. I'm honestly surprised that Ethereum didn't delay the merge again. Proof of stake basically makes Ethereum more honest about what it really is, a centralized blockchain. It's going to be difficult for the coiners to refute the arguments for proof of stake on Bitcoin. Just like proof of work isn't decentralized, proof of stake isn't decentralized either. But it has the advantage that it doesn't set a country's worth of energy on fire. Well, I saw something on the Buttcoin subreddit this morning showing that all of the miners basically went over to Ethereum Classic. Or that's what they claimed. I don't know. I'd like to see an analysis of where the mining power went and how much of it just maybe shut down. I'm going to bet that what will happen is they will switch over to other coins at first, and then many miners will kind of phase out as they realize that they aren't making any money, right? But it's probably too easy. Probably too early to know. Today would be a good time to be like, if you're in the cryptocurrency world, you know, to be on alert. Why is it not loading? Maybe I just need to restart NinjaTrader. That's the beauty of this setup, is that I can just reload the charts if I have to. I have to say, when I was so another thing, so we haven't had the chance to go through the charts or anything, but we should do a little bit of news. Did Rhythmic? No, I didn't have any issues like that. So I think what happened when I came in today was that I accidentally clicked on Rhythmic Trader Pro twice or something like that, and so I think when my applications started up and everything, they didn't know which instance to try and attach to or something like that. And I was able to recover it in Jigsaw, and it seems like NinjaTrader is maybe having a little bit more trouble with it. So let's restart NinjaTrader. We'll see if that fixes that problem. Well, I mean, the Jigsaw is working with it just fine, right? It was just none of my, I closed my workspace and opened it back up, and you might get a little hitching here on the stream. I closed the workspace and opened it back up, and the charts weren't loading. Now I'm opening the workspace up and the charts are loading. Yes, sir. There was, yeah, you know, I kind of forgot about that already, but when the news came out, there was a little bit of selling before finally moving higher. I wonder if that is because of the retail sales. So the Philly Fed Business Index, negative 9.9 versus 2.25. That's not good, but I don't think that that's a super high, you know, I don't think that that's a super important release. New York Fed manufacturing was better than expected, negative 1.5 versus negative 12.9. So when I look at these numbers, there's actually some good things in it, like US retail sales in particular being spot 3 versus negative spot 1. That's good, right? So one of the things that you're going to hear a lot over and over and over again is the pattern people. The people that say, well, these historical patterns, they run over and over again. So you're going to say, well, every time that you have inflation, what happens is that people pull back on consuming and then you have a recession. And I think that these people are kind of saying that because they don't like the Federal Reserve, and they're trying to argue that the Federal Reserve shouldn't raise rates because it will just resolve itself on its own. But here you seeing, we have had really insane inflation over the last year, and it still doesn't seem to be enough to cause consumers to cut back. Could it be that different unique circumstances result in different outcomes? Couldn't be, because then we wouldn't be able to just look at a chart and, you know, pretend we know what's going on based on what it did last time. Hypothetical. What do you guys think about, so I think we should do a poll here. What do you think? What would be a good okay, let's say 39.50. Let's say 39.50. Create a poll. ES in 1 month. Above 39.50, below 39.50. What do you think? I mean, I think I know how this poll is going to turn out, but let's just prove it. Yeah. Okay, that's better. And my watermark is working. Everything's loaded. We're all looking nice and clean. So this move in the treasury. So now that we've got all this coming over. Okay, wait. First, let's do the rollover. Yes. And save the workspace. Come over to do our volume profiles and so forth, right? So, in the treasuries, so yesterday we had a little bit of an up move based on perhaps some potential currency intervention from Japan. Now, what I've learned about currency intervention is that when the currency intervention comes in, the market doesn't just immediately turn around. Historically, they've fought it. So we shouldn't be surprised to see a big drop here this morning in the treasuries. Not really any huge catalysts overnight though. S&P 500 flat from yesterday. Hey, listen, after a day like that one, to have a day and a night sideways, that's not bad. Okay, let's hope that it doesn't take another leg lower and start pushing 3,900, right? Oil was starting to look like maybe they were pulling out. The administration saying that they want to buy oil at 80 did cause a bit of a rally, but I guess so far that's fizzling out. We'll see where that goes in the long run. I'm a little skeptical that they'll get 80. Yesterday, natural gas took a huge jump. It was up 5%, but it is coming back this morning. And then we got gold and silver are in the doldrums. Man, when we were over here, well, especially if you look at silver is actually better, okay? But silver had been oversold. So, man, it was looking really good. And then they had this thing, and now, especially when you look at gold, it's just like, that's so yuck. That's so yuck. Copper too, not looking so hot. So copper tends to be driven more by demand from China. I don't know, like, because I continue to see headlines about concerns about copper supply in the future, but the current supply and demand dynamics are a little hard to sort out, I think. Yeah, we'll come over here. So Bitcoin, the merge did go through again, but like no real reaction in price or anything like that. And then I just got to come over here and switch over to the dollar. The dollar took a huge jump off of the CPI report, but still we've been going sideways. So that's basically where we're at. Biggest loser today, natural gas and oil, followed by silver and copper. So some of the commodities really getting hammered today. Soybeans and corn doing well, and the euro. So other than that, a little bit mixed. And again, we're gonna come back over here. So far, the S&P 500 has not reacted too much to this news, and the treasuries reacted, I would say, an average sized move, maybe on the higher end of average, to the upside, showing a little bit of a liquidity hole here. Not enough for me to say like, today we're gonna have a trend day up, but I think if we were going to take a trade, I think that probably we have to take it to the upside again. So, but I think today, given everything that happened over there, well, maybe I might take a long in the treasuries if I get a good spot. But I think that today we might want to do a little bit of research on what's going on with Ethereum, right? So I'm coming over here to Reddit. You know, I don't recall reading anything about it on Zero Hedge this morning. Let me come over here. Oh, by the way, another thing we got to mention, railroads and unions have reached a tentative agreement to avert the rail strike on Friday, and the union members just have to approve it. So that's very encouraging. It sounded, that whole thing, I'd never seen something blow up into a political issue so quickly. And I was kind of looking at, okay, I think the rail workers, they have a good reason to want to try and negotiate something. But then, there was like the labor board appointed by Biden, and they intermediated between them. And the deal that they mediated between them didn't sound very good to me for the railroad workers, but I don't really know the whole situation. Like, you don't get to hear both sides because it's become so politicized so fast. And then you had Congress trying to force them to accept the mediated agreement. I was like, what? But that did get shut down by Bernie Sanders, and now they have a tentative agreement. I mean, that's really good news, because a rail strike would have been such a gut check. But the way that thing just played out so quickly was just really, really surprising to me. Okay, so Zero Hedge says core retail sales disappoints in August, and July is revised down. So we're just coming back. I'm just coming back over here. Retail sales was spot 3. Core retail sales, where's core retail sales? Core retail sales month over month, negative spot 3. Is a negative spot 3 a terrible one? But it is down. I suppose that the market might be saying, oh, the Fed might have to back off earlier if people aren't buying things. I don't know. I'm browsing through here what Zero Hedge says about it. Nothing too significant on that one. Oh, here's a story they have about the merge. Of course, they think that it's going to be a positive thing for them. See, the thing that I would be on the lookout for is that it's extremely unlikely that such a significant change goes through without some sort of a technical glitch, right? So I kind of want to keep an eye on that to see if you get any kind of problems. Major Ethereum mining pools will back ETHW mining. Okay, so not only did some of them go to a classic, but some of them also branched off and just created another chain called ETHW. Wonder how big will we be able to see that on Coinbase yet? Or sorry, Coin Market Cap. ETHW? No. Of course not. There's the treasury's moving higher. I should have taken it when it was had the chance. I kind of thought that it was going to chill out there and give us some time, and then maybe I could take a one, you know, then I could take a trade. Now that it has moved, I feel like I've probably missed one. That was probably one of my best opportunities. It was maybe 20 bucks. So that kind of sucks, but well, kind of got to deal with what you get. Okay, so not too much on that story. Let's try reddit.com/r/cryptocurrency. Tobias, I'm only now seeing a question. Can I improve the zoom function in NinjaTrader? I want to see more information on the chart. It looks to me like it's limited somehow. You mean like you can only zoom out so much? There is a slight limit to how far out you can get, but that has more to do with like the drawing. Like if you zoom all the way out and that's not enough, then you need to be looking at it on a different time frame. Yeah, Loftus says bonds are on fire. They really are, man. I mean, you gotta keep in mind that this is a retracement of the overnight move, and I don't know if there was any really good reason for the overnight move. We're still kind of like probably free to continue moving back up to 115 even. That's kind of been the place they like to chill in the 10-year, right? So although that was a pretty strong push, it does look like it created a little hitch here. So wow, 1.3 thousand comments on something that happened only 6 hours ago, and the US hasn't even really woken up and gotten going. That's nuts. You need the 15-minute because your custom indicator is based on this time frame. I don't know if there's anything you can do. Like the problem is like if I zoom out here. Well, this chart's probably a bad example because I don't have enough data coming through it. But like this one here in the dollar, that's as far back as I go, right? If I want to zoom out further, then my bars would have to be smaller than a pixel, right? So how do you draw that? Yeah, it's like, I wonder if there's So I think that today we still want to be on the lookout for currency intervention in the Japanese yen. I don't know if that's what's going on here, but this leg higher in the treasuries does seem to be driven by the currencies. I thought maybe there was a magic config file somewhere. Well, the best that you get is you come in here to data series, right? And oh, actually, I think I do know, maybe have an idea for a trick for you. Okay. Anyways, and then, you know, like you change the bar width or whatever, right? I wonder if you add two data series onto it, if that might help you. So, you know, you can have like, yeah. You can add the same data series on there 2 times and have the one like be hidden. Or so something that a really neat trick that I like to do for order flow. If I have a chart where I want to do order flow and it's really expensive, but so I don't want to load multiple days of data, but I do still want to be able to look back at multiple days of data, then I'll add one data series that is only like today's data with take a replay on. And then I'll add another one that's like 90 days of data without tick replay on. And you know, that's kind of like a nifty little workaround for things like that. You could maybe add another chart that does have them on a different time frame and or is using a different chart style and see how that does. But probably what I would be doing is just creating another chart that's for the higher time frame and just not look at my indicator. I don't know. Yeah, I don't know if I can participate on this move, guys. The issue I have here in this situation is I think maybe I have some ideas about why we might move up, but I don't think from those ideas that I have it's very clear that we get continuation, you know? Like I could have taken along here saying, well, poor retail sales, that's good for the treasuries who want to buy them. We could come in and say, oh, well, we think that the Japanese yen is going to continue to buy. But we've had some pretty big moves up here already. So the question is, how many orders net do you want to have on this? We've already done about 12,000, which is a lot for this kind of action. So trying to take a continuation off of it is I'm finding that a little hard. If I was going to try and take a trade like this, I think I would need a better price to be able to justify it. And furthermore, I'm not really it's not acting like your typical waves that you'd get with the timing. It's just kind of been, they're just kind of pushing higher and higher and higher. So I don't know if those are really the things that are actually driving it, right? I appreciate the economic talks and the bond focus, but I really have to translate it into ES/S&P 500 position trades. Well, so the thing is that the number of times in which you can translate that stuff into a trade in the S&P 500 is usually a lot less, right? Just because the S&P 500 has so much more going on, right? So you got to remember, orders are what moves markets, right? So you can have a situation in the S&P 500, where really bad economic news comes out, and you know it's really bad news, and that should cause the equity indexes to sell, but because somebody is allocating money that day or whatever, it moves up anyways, right? That sort of thing is more likely to happen in the S&P 500 than it is in the treasuries. The treasuries are just much more reactive to news, if I can put it that way. So I think that the kind of situations where you really get a clear trade in the SPOOs are quite a bit more few and far between. And you got to realize when you look at my trades, you know, as of late, and this run that I've had, and I've been on a really good trading run for the last, well, really all summer, really. And I'm not taking a lot of trades, and I will often go a week, even 2 weeks, not taking a trade. You know, like today is a great example, because it looks like there's some real opportunity out there, and they are getting a really strong surge up. I would like to take a long. I don't know how far this. I am getting the pullback. Hey, look, I said I need a really good price. It is pulling back pretty good. Maybe we could take something in the 23 area. But I'm starting to think that today might just be I have to sit on my hands. I really need to see the perfect confluence of the liquidity and predictors of order flow and correlations and the timing all kind of coming together. I was thinking about this morning as, you know, okay, so do I really have everything on the channel that you need to be able to learn how to trade the way that I do? I think there's still some pieces missing. And the key piece that I think I haven't talked about is working with the correlations, right? Agreed, today is another day to sit on your paws, all you pandas. Wait, why are you calling us pandas? When somebody says something like that, I'm like, ooh, should we like rebrand the channel to be all about panda stuff? But then like that would make the stream like much more attractive to Chinese and Asian audiences, and I don't know if the CCP would like that. I don't think the CCP likes me. Bye money uses a panda. Oh. It really, can you tell that it kind of bothers me, even though it shouldn't be a big thing? Like, who cares? The CCP doesn't care about you at all. But like, here's the thing. I think China's a really cool place. I would really like to go and visit China. I would really like to go and visit Taiwan. I really don't like traveling, to be honest with you, because I like to keep my schedule. And I also don't like to pay for hotels. But, you know, I would like to go and visit Taiwan. And I kind of like, I enjoy trying to learn Chinese, although, man, Chinese is an interesting language, actually, because so something that I kind of spent a lot of time on, like a really esoteric interest that you wouldn't expect somebody to put a lot of time into, but like I did, and it turns out I'm actually like one of the world's foremost experts on the subject now, apparently, because I've gone and I've read research papers about this subject, and they were like wrong about things. But the Mormons, when they moved to Utah, they decided, or there was this guy that created an alphabet. So back then, one of the big things was like when people would talk and have a speech, you would want to try and transcribe it down, and they had these writing systems to transcribe it down. And so they had these writing systems that were like really, really fast to write. And really only the person that wrote it would be able to read it back to you, but it worked. And that's where a lot of speeches and stuff, that's how we have them today, you know, from speeches that happened in the early 1830s. And so one of these guys that was into that created a phonetic alphabet for English. And so I got really into the neography and like constructed languages and stuff. So the problem with the Deseret alphabet is that it doesn't deal with schwa sounds very well. So there's a lot of consonants that are basically pronounced the way that they are because English speakers are lazy, essentially, and so the Deseret alphabet doesn't deal with that very well. But anyways, so the big problem with the Deseret alphabet though was that you would have like an O, and there's like a couple of different O's. So he basically, the guy that constructed the language would have like, okay, this is this O, and then there's an O with a little loop, and then there's an O. It's really hard to memorize all that stuff, right? So you get the same problem in languages, and Chinese and is it Norwegian? Or like on opposite sides of the scale of this, okay? So like in Norwegian, all of the words are really, really long. And if you want to say like I ran versus I'm going to run tomorrow, or like we ran, those are all different words and they're like conjugated completely differently, right? So like in English, you can say run versus ran. They're similar words, right? Or in Spanish, they have, different ones based on who it is. So, like if we say go, you say, we go, we say, the verb is va, but if we say we go, we say vamos. And if you say you go, it's va, right? Norwegian, it's like every one of those are like just a completely different word they have to memorize, right? And they're really big long words, right? Chinese is like the complete opposite end of that. All of the words are really, really short. And there's not much conjugation sort of stuff like that at all. You just say the thing, we go, whatever, right? So it's easy in that respect. From a grammar perspective, Chinese is a lot simpler than many other languages. But from a memorizing the words perspective, it makes it so effing hard because all of the words are these short little things. And so to memorize those short little things, I find extremely difficult. And then to be able to interpret that as people are speaking it, it's so hard. It's so hard. My wife is from Hong Kong, but learning Cantonese or Mandarin is still super difficult for me. At least I can order food. Yeah. Turkish and English are no. I think that the hardest languages are Norwegian and Cantonese and Navajo. Navajo is so weird that gotta focus on making some bamboo today. Anyways, I digress. The whole issue is that I am ideologically opposed to many of the things that the Chinese government is pushing right now. But I love China as a place. And someday, I hope to trade Chinese bonds the way that we trade US bonds, maybe. Maybe. Yeah, the code talkers really prove that about Navajo, because yeah, Navajo just has really bizarre rules. It really, when you really dive into that sort of a thing, it really becomes an interesting subject because you would think, hey, let's get together and let's make a language that is just like the most optimal language. And now that we're in a global economy, everybody learns that language, and then that will improve society because you have more optimal language, right? The reality is that you can't do it because there are trade-offs, and some languages go towards some trade-offs and other trade-offs, right? So like Esperanto, which is a constructed language, kind of went one way in trying to make a language that was just very elegant. So Esperanto sounds really nice when you're listening to it because of the way that all of their conjugations kind of flow with each other. I heard the Icelandic language is the most difficult one. Yeah, I was like it was Icelandic or Norwegian words. So for missionaries, you know, because I live in Utah, we're Mormons. The languages that like the missionaries had to spend the most time ahead of time to go to and stuff were the ones that were learning Chinese and like I said, I think it's Norwegian. So the problem with Norwegian is you have to memorize a lot of things. I'm told that the missionaries for Norwegian that they basically never get too fluent. Like most, you know, Spanish, you get in there, you're doing it for, you know, 6 months and then you're doing pretty good and you can speak in it. But Norwegian, they're saying that even after 2 years that the missionaries are barely even able to talk, let alone understand what people are saying. And they have to rely on members that's, you know, a lot of people do still speak English. They have to rely on that a lot just because there's too many, like for anyone, just imagine any one verb that you want to learn, you have to learn like 32 different versions of it and they're all separate. They're all separate. German is an interesting language because I think that the sounds are good. I think that the accent, like when a German speaks English, I really like it. But when a German speaks German, it's like, ugh. You know what I mean? Because the German language is very harsh. Also, they kind of have utilitarian words. But it's all of these things all kind of like reflect something about the culture that they have, right? But like the thing about German that's nice about German is that you can express yourself much more precisely in German, right? Try Swiss German. I'll have to try listening to that. Dutch. Dutch is a weird language. I can't quite get a handle on what is unique about Dutch. I can identify the Dutch accent. That's because a lot of electronic dance music people are Dutch, right? I don't know about this. You know, this whole time I was like, hey, well, maybe we could take a lung up in here. Now I'm in this situation where it fell down to 23. Actually, I think it touched 22. Shot back up. It's fallen back down to 23 again. And you have to be saying to yourself, okay, so if we want to take this for another leg long, can we get into it here? Like, how confident do you feel about it here at 23 now? Because I don't feel very confident in it at all. In fact, I'm a little worried that the liquidity could be a little hairy all the way back to maybe even 16. Which would be about the start of the move. So, and I don't know if there's really going to be more orders to the long side. The cumulative delta in the 10 years come back quite far. I'm not getting very good reads on the deltas in the 5 and the 30. So the volume picture is not very clear at all. Something that really, I really wish I would be able to spend more time on is to become actually fluent in another language. Like I spent a bit of time studying other languages, but I've never been in a situation where I really felt like I could become fluent in a language. I studied French in school. I think that if I was to really become fluent in a language, it'd have to be French. Like if I was going to move to another country where I didn't understand the language, I think it would be France. Not because I think that France would be a great place to live or anything, but because a lot of the things that I'm interested in are happening in France. Like all this market microstructure stuff and everything. Like the top professors and school programs and stuff on this subject, from what I can see, are in France. So wouldn't mind going there. French culture is cool too. I mean, people are rude in Paris, but it's just Paris. Only Paris is rude. And they're not rude if you just you know, you assimilate, I guess you could say, and learn the rules, right? I actually admire that. Something I've noticed in a community is like you come into a community, like here's the values of our community, here's how things are done. And if you break the values of that community, people are going to correct you. And that's how you maintain the quality of a community. When I go online, and what I see a lot of these days is like, if you go on Facebook, there's nothing like that. There's absolutely nothing that you could do in a Facebook group that people are going to be like, we don't do it that way here in the Facebook community. That doesn't happen. That doesn't, right? And it's really like that on all of these large communities. It's very difficult once you get a community that large to enforce a consistent culture. But I feel that to have successful groups, like especially like what we're talking about here on this stream, right? We have a little bit of a culture here on this stream that I try to direct people towards. Maybe I'm not as mean about it as I should be. Like when people get going on, you know, posting their technical analysis charts and fib levels, I'm just like, ugh, you know. But I try to guide them gently. And the problem with that one is that they don't assimilate. They just go, oh, well, I want to go somewhere where they talk about technical analysis, right? That's a subject that I think I need to learn more about. Is like, how do you foster a positive culture, right? Like I know the values that we got, right? Integrity, excellence, teamwork. Okay, but how do I translate that through in the culture of the stream, right? Because so far, I've just relied on you guys being really awesome, you know, and that's worked. But if we ever got bigger, that would be a problem, right? And that might be something holding us back from getting bigger. Sam, I have a hard time understand playing the range. Well, okay, so here's something that I've learned, Sam. Let's go into detail on this subject because this is a little bit more theoretical for me, but I think that it's an important point. So if we get a move like this, whoop, and then we get a move like this, yeah, right? So these are legs, and you tend to see like a really good one would be like 3 legs. Okay, so this is the meta order trend that we would really like to see. Move up a little bit of a range, move up a little bit of a range, move up a little bit of a range. Okay. Now, what happens in here? Well, what happens in here is that the liquidity becomes strained, right? There's not as many limit orders. You'll see them, they'll only offer like 50 contracts this way and then only 50 contracts this way. And then meanwhile, if you want to move up, you have to do like thousands of contracts. And so it just sits there, right? Okay, so this spot is difficult to make money off of. Why? Because if you're sitting here with your order, you're unlikely to get filled. And if you do get filled, it might be because it's reversing, right? So this is difficult to play, right? Well, let's say that we're not in the middle of a trend. We're just in a market making day, right? Okay, so when you look at this, you say, oh yeah, you just gotta trade the range. Easy, support, resistance, buy it, whatever, right? And what'll always happen to you, I swear, you'll see it is going in this range and you go like, okay, so I want to buy it. I'm gonna buy it right here. It goes and then and you're like, oh crap, you stop out of it and then it goes back into the range, right? It does this crap all the time. So what I've learned is that the market makers, they make their decisions based on what the volume is and what kind of fills they're getting. So if the market maker knows that the market is theirs, right? Because when we're having a trend, it's, you know, the market makers lose money. But if not much is going on, those are some of the situations where the market makers can do the best. Like a day with really, really active volume, but no trend, those are the best days for market makers, right? Because price is folding back on itself a lot. Okay, so can you try and play that and discover what the market maker is doing? Well, the market maker is going to do whatever makes him the most money. So if you all come in here and try and buy it, then he has now an incentive to push it down and get more fills down here on stopping you guys out, and then let it filter back up to here. You know, just pull his offers and let it come back up into here, and you'll see it. It'll move back up here on like 0 volume, and you're like, what the heck, right? So in other words, when there's not an active catalyst pushing the market, my observation is that it is extremely difficult for retail traders to make money. So there's this whole thing, like, you either be a trend breakout trader or a range trader, and I'm saying don't be a range trader. It just doesn't work out there, because really what you're doing is you're trying to trade off of a pattern in here in an area where you have no edge, and that the pattern is not, there is no actual real pattern. It's just a trick, essentially. Like, the only way to make money from doing this is to take on excessive risk, and then hope you're lucky enough that you always know to get out before there's like a real trend, right? That's the only way to make money off of that sort of thing, from what I've found, right? What about delta neutral in the range? Yeah, exactly. Like, what is it really telling you about the market? There's informed traders aren't really active in that market. That's what it says, right? The more volume, the more orders that are going through in a market, the more opportunity for a retail trader that there's going to be. But if there's not a good reason for them to be trading it, then right, yeah. T-Spells, I've learned the hard way to just be patient and wait for the right setup. Yeah, just wait for a real catalyst, because I don't think that there's actually any edge in these. Now there's another situation though, and it's actually, well, yeah, it may actually be what's going on right now. I'm not so sure. But the other thing that you get is you have a move and it goes up like this, okay, and then it'll consolidate in here. So like the meta order is done, and then it will consolidate up in here, right? Well, if before the liquidity has, so this, let me redraw. So you have this move right here, right? And then another move that's about 2 times that of it mean reverting, okay? But if you short circuit that and sell down to here, the sell will go further. The sell will go further. And so this is what I would think of as a mean reversion trade. You have a big move up, and then somebody else comes in and causes a big move down. And when you get mean reversion like that, those can be very effective trades. Also, you can, if the range is wide enough, you can, in some instances, see where this thing is happening and take it from here to here, right? So it's a teeny tiny trade, okay? But, you know, the further away from this move that it gets, like, the worse off it is to play the range, right? Now, if you're looking for another leg, then this can be great, right? I can come in, I can get the trade, and since I have a really good probability of knowing which way it's gonna go next, because I have information, I have predictors of order flow, then that's very different as well, and it's gonna give you a location where you're likely to be able to get a fill, right? and you can just quietly sneak in an order. Even if you had a lot of orders, you could sneak in a position in here. Okay. But when the market is in a quiet range, don't mess with it. So what I'm seeing here in this market is one that is a little bit ambiguous between, is this a quiet range or is this mean reverting, right? Because we did get some strong flow to the downside, although the move where we've gotten to is just kind of a little bit of a pullback and is unclear, right? If it was really a strong meta order going the other direction, then I would have expected to already be at 16 right now. So it may be the case. I mean, there was very much selling in the 30-year. They did sell in the 10-year a little bit. The cumulative delta in the 30-year is only like 1,000 contracts though. So we may be seeing a situation where there really isn't that much volume in there, but the liquidity is just very light. I should note that most of this week we've been having like 1500s, 1600s, like you see down here in the 16. But up in here, we're more like, you know, like look at 114.19.5. There's only 991 contracts there, right? So liquidity is a little light. So I think that in this situation, if we're going to take a trade, we really are going to need something with us. I think that the trade is long. I think that this is kind of the lower end of the range. So we could try here long, but I'm not going to do it on a live account. Let's see here. What's the time? 7:25. You see, and the other issue is that the timing's just not right. This is not behaving. There's kind of a pace and like a time that certain things will tend to happen in the treasuries because of how long it takes the liquidity to recover and stuff. And it's not behaving that way. It's not behaving that way today. It's much more random to me. Did you give a rundown on how to trade cumulative delta? Well, don't trade it. So, maybe the way I should present it is this. We need to analyze the current market conditions to see what state the market is, and that kind of will give us some idea of what kind of moves could potentially happen, but we're not trading off of that information. The thing that actually gives us like a buy or a sell signal is going to be more informational in nature. That is to say, piece of information that comes from outside of the market, like that the Japanese have been talking about doing currency intervention. Okay. 145 in the Japanese yen apparently is like their key line. Okay. That you could trade off of, right? So then what you do is you combine the current market conditions and that informational piece, and then you get your trade, right? And that will kind of inform your timing and everything else, right? But so really what you should be asking is, could you give a rundown on how to analyze cumulative delta, right? And what I'm looking for in cumulative delta, the way that I watch it is, if I have a move up, I should see a move up in cumulative delta. If I have a move down, I should see a move down in cumulative delta. When I don't, then my first question is going to be why, okay? So if I had a really strong move up in price and it wasn't accompanied by cumulative delta, that basically means that that move was driven by the liquidity pulling in front of it and not necessarily by strong market orders. Informed traders tend to prefer to use market orders. So the most likely case that it might be doing that is that there's a currency correlation, right? So if we had a really strong move down in the treasuries on no volume, I would be looking over here on the very far left here, 6J, I'd be saying, well, was the 6J moving down? If the 6J was moving down, the dollar index was moving, and then that means that the market makers were adjusting their bids and offers based on the correlations, and the market orders weren't actually coming in, right? That's really, really key, because then I can come in and I can say, oh, well, I actually can't, like yesterday, I do want to come in and I want to be short or long the treasury because of what the 6J is going to do. And I know that I'm not actually going to be able to see it in the volume in the treasury, right? The next thing is that I'm looking for degree. So like, look at this one right now in the treasury. Strong move up off of the news. Strong move back afterwards for no apparent reason. But they are equal in volume. So when I get a move like that, especially if it happens early, I think these guys, they had about 30 minutes. And then this move has taken about 30 minutes. But typically, I would expect that this down move will go a little bit further than the up move. It will engulf the up move. If you were to draw a candlestick, you'd see something like this. You know, here's this candle, and then you'd see this candle, and it ends up lower, right? That's the kind of thing that you're looking for. Don't informed traders use more limit orders? That's what I would think. No. So the data that we have on this, of course, I think that we got to be careful about overgeneralizing, but the data that we have on this is that informed traders maybe use 25 to, in some cases, 50% limit orders. But you have to realize that for the informed trader, the biggest risk for the informed trader is that the market moves away from them too quickly, right? The biggest risk to the informed trader is time. And, you know, because as more time goes on, the more chances that other market participants figure out that piece of information and also start to trade it. So the informed trader is more concerned about getting his trade in. So informed traders tend to use limit orders. And so the way that I would interpret cumulative delta is that if we have a large move based on informed trading, the market is moving because a piece of information came out, the piece of news hit, or because of an economic report that says something about the economy, right? When I see one of those moves, it should be accompanied by cumulative delta. Whereas when I'm seeing a move that is based primarily on a correlation, I'm not going to see those deltas accompany the move, right? So that's how you do it. So, but I want to keep track of how many orders have come through in the cumulative delta, because you can kind of guesstimate that. You can come down and you can say, well, this was a significant piece of news. This is the change in orders of cumulative delta that I would expect to see. Because if you were to go through, like, let's say that you want to do a study and you want to say, how far does the market move after non-farms payroll, right? And so you're going to go through and you look at the last 20 years of data and you look at the volatility after non-farms payroll during that whole period, right? And then you'll get some distribution of volatility, and you're going to come over here and you're going to say, okay, so we just had a move, we just had a release. I think that release was bad. I'm going to go long the treasuries as a flight to safety bid, and this is how far I think it's going to go based on the historical volatility, right? Well, the problem that you're going to have with that kind of analysis is that how far the market ends up going in that instance is going to have a lot to do with what the current liquidity conditions are, right? So that's why what would be a much more effective way to run a study like that would be, what is the net change in cumulative delta after a move like that, right? Now I know what the change in cumulative delta that I'm expecting is, and then I can come over here and I can look at what the current liquidity conditions are. How many resting orders are what is the resting liquidity? How much tends to pull, right? And based on how much tends to pull, what is the latent liquidity? And then based on that, you can make a guess about how far it's going to go. But that's kind of hard. That's really hard to like do quantitatively. So instead, what you do is you just say, okay, I want to be long until there is a change of 15,000 in cumulative delta, right? And then you use the cumulative delta as kind of a sign that maybe this move is over. So that's how I use cumulative delta, right? So don't trade cumulative delta. A lot of people will say, okay, what you want to do is you want to wait for when there's a divergence between price and cumulative delta, and then that's your trade. And based on these situations, based on X things, this is when you go long and this is when you go short. Don't play that game. It doesn't work. Doesn't work. But cumulative delta does have a lot of informational content in it. And the key thing, like I know, again, what you were saying there, Tobias, is it's really the key question. Don't informed traders use more limit orders? No. It's 25 to 50% based on the studies that they've done on it. And so when you think about it from the perspective of just as a heuristic, okay, informed traders prefer market orders, okay, then that helps you interpret what you're seeing in cumulative delta a lot better, right? Because now you see cumulative delta is the best indication that you can have of informed trading, right? What's the definition of an informed trader? So an informed trader is a trader that has a piece of information that is likely to predict the future orders in a market that the rest of the market does not have. So the best example of an informed trader, or at least the most clear example of somebody that's informed, would be somebody that has inside information. Now, we don't trade on inside information. It's kind of weird in futures because you can trade on inside information to some extent, because like if you're a farmer, you have some inside information about your crops that the rest of the market doesn't have, and you can be trading off of that, right? Because that's the way the futures market works. But don't be going and like getting a leak on the non-farms report and trading off of that's a big no-no, right? You get in trouble for that. So don't trade on insider information. But there are many instances where there is information out there that is pertinent to the movement of an instrument that not everybody in that market is aware of yet. And then you can make a trade off of that, right? You can be the informed trader. Or, there can be situations where you're just faster than everybody, right? Like, well, okay, like the CPI was a really good example, right? Yeah, like the market moved really big, but if you had been able to fit an order in there 5 seconds after the news hit, you probably would have made money just because you were faster. You were informed and you were faster than the rest of the market. So that's what we mean by an informed trader. And the framework really comes from the Albert Kyle model in his 1985 paper. So in that paper, the model that they use is they say there is an informed trader and there's a market maker. The informed trader knows something that basically tells him exactly what the price is going to be at a specified time. And so the question problem is, what would be the optimal number of contracts for that informed trader to use to make the most money on that situation, assuming he has like an infinite payroll, right? And then they use that metric, basically informs the market maker how much he needs to adjust his prices in order to still make money from market making. right? And then there's this other side, which is the noise traders. And in that model, noise traders, they generally don't make money. And the money that the market makers and the informed traders are making generally comes from the noise traders, right? So that's why you'll hear me use those terms a lot. That's really foundational to what we do. Is there are market makers, there are informed traders, and there are noise traders. Okay, you don't want to be noise trader Ned. Noise trader Ned thinks that technical analysis works. He thinks that he sees a pattern, and he doesn't realize that he's being fooled by randomness. And he is the one that loses money to the benefit of the market maker, Bob, and the informed trader, Alice. Okay? We want to be Alice. We want to be the informed trader, somebody that knows something that is very likely to predict where the market action, what the futures orders are going to be in the short term, and know it before everybody else, so that we can trade on it and make money. That's what we do. Evan Davies, welcome. I love it when people come in and they say they're a first time viewer, because that kind of helps me to know, like, because I'm here every day and we repeat a lot of the same information, and a lot of the people that watch this stream are people that have been here for like 5 years and watch every day. So when we have somebody new, it's kind of like, okay, so we should look at the questions and stuff that they have. Oh, and you're an options swing trader. Okay. You know, with this whole so I now have order flow for stocks. Actually, I should be pulling that up now, because that market is going now. Where's my Apple? Why don't I at least have Apple up? But you can also get it with options, although it's a little bit more money. But I didn't mess with the options. I didn't find that too interesting, because it's just very, very thin in the options. Day trading is scary to you? Well, it should be. Most day traders lose money, right? Most day traders lose money. Like this is the difficulty that I have running a YouTube channel on this subject, is that what I teach you basically only just kind of puts you on par. Like, it just gives you a chance to figure this out, right? I can't guarantee that you make money. The vast majority of people lose money. Like, it's something like 70 to 90% give money and give up. I would like to think, because we have a very, very dedicated audience that has been here for years and years and years, that a higher percentage of my audience are the ones that actually figure it out. But hey, Seth, is this 9-15 live? What do you mean by that? What I'm showing you right now is live? Yes. The stream maybe adds like 5 seconds latency between you and me, but the data that you're seeing, it's all live data. I know full well that I don't know what I'm doing if I day traded. Well, so for options, swing trading is kind of an interesting approach. So I think that you still want to... Oh, it says the 14th. Yeah, sorry. Let me fix that. Let me fix. The reality is that I don't really care to have the date in the title, but it only matters afterwards for you to try to find a past stream. Like the way that this stream really gets used, and where a lot of my viewership comes from, is okay. I want to practice reading the order flow during a non-farms payroll, for instance. So then you'll say, okay, when was a non-farms payroll where the market moved really big or something like that? And then you go back into my past live streams playlist, you go and find it and watch it. So sometimes I forget to change the title. You're like, you were watching Wednesday's day action or something. Yeah. You know what? It's bouncing pretty hard here. They did touch 16. Did I not tell you? So can I share with you a technical edge? I'm gonna give you some edge here. Dead serious, okay? This is from all of the investigation and study that I have done, the most significant currently existing technical edge in the market. And it's this: people tend to place their orders at even numbers. So in the S&P 500, 4,000, that's a really, really square number, right? There's going to be liquidity at that spot, right? And in the treasuries, those even numbers end up being 0, like 0, 0, 0, and 16. And that's how I knew that if they were going to make a big push down, 16 would be a key point that they'd be reaching for. And what do you know? That's exactly where they turned. Always something fishy going on at 16 in the treasuries. FXI, oh, you've been shorting the Chinese economy out through all this? Boy. Yeah, I mean, options are really interesting because it gives you a lot more choices, right? Because you can make a trade based on what you think volatility is going to be. But it also involves a lot of leverage, right? It's a lot more difficult to manage your risk with options, right? Because I mean, you can get out of them early, but like, you don't, who knows what price you're gonna get, right? And so in the risk management in that, sometimes the best that you get is, oh, you know, if I win, then on expiration day, it's going to be worth 3 times more than if I lose, right? And we'll lose the whole investment or it'll triple, right? That kind of makes swinging options a different game. And the reality is that the win rates for options traders aren't very good, right? Vast majority of options expire worthless. This bounce back up here is pretty impressive, but the delta on it is not. And it has been accompanied by a move in the Japanese yen, but in the Japanese yen, you look at it and you're like, oh, it's a teeny tiny move. So I do not think that what we just saw right there, that bounce in the treasuries, would be like a good reason to go long. I think that this still kind of says to me, yeah, we're kind of in a difficult spot. It's options trading. Well, it's not a scam. Options trading itself is not a scam, but probably most of the people out there trying to tell you to trade options are maybe scamming you. I mean, listen, the product does what it's supposed to do. It's just that a lot of people that get involved in it, they don't understand the nature of the instrument that they're trading. There's always fake gurus, yeah. It's really frustrating to me how much of society here has turned into, oh, I'm just gonna feed people BS and get as many people to pay me as possible, right? I suppose that's what happens when you start to get an economy that's based more on services, right? And especially like when financial services is a really large part of our economy, then of course there would be people like, you know, sharing education on trading and stuff. But a lot, I have to say, I really don't like to talk about other influencers, especially not by name. There are some people that, you know, they're in the community we end up talking about, and there are some people that I really, really like. But more and more these days, I look at what people say and I'm like, this guy doesn't know what he's talking about. This guy is clueless. And it's so obvious to me too, when you get people that know what they're doing and people that really don't. And you can kind of look back on their experience and go, oh yeah, well, that's why this guy's like this and this guy's like this. Never hold options I hold to expiration. The last 25 days are where you lose most of the time value. Buy in the money options. If you buy out of the money, you will eventually be out of money. Well, it depends on how you what your edge is, right? But buying in the money options certainly helps, doesn't it? But you know, like here again, if you come back to my framework, I say that to have a trade, you need to have a piece of information that is highly likely to predict the future orders, right? And you can play that game on different time frames, right? In other words, in order for me to want to trade an option, I really need to think that I know something that the rest of the market doesn't. So at the beginning of the year, I felt very strongly that I knew something about the supply and demand in oil that the market wasn't pricing in, and I was correct, and I made a lot of money off of those options. Then later, I took a much smaller trade on something that was based mostly off of that I felt that the options were not pricing correctly, and that I had a good chance if for a breakout to the other side. And you know what? I actually kind of got it, but it didn't run. And so those options expired worthless. I felt like that second setup, that's a little bit more technical in nature, right? And it didn't really work. But if I really do have that piece of information, then it would make sense to use out of the money options, right? Something that's maybe slightly out of the money. You kind of have to know how far it's going to go. But like, heck, if you know something that's going to make that stock like double tomorrow, I don't know what you would know that wouldn't be insider information that would tell you the stock is going to double. But if you did, you know, buy out of the money options. Yep. Otherwise, the game to play is to be the market maker in the options. Now a retail trader can be a market maker in options. We had a person here on the stream that kind of, you know, he had other issues, but he was successfully market making with options, right? And you can go in and you have to be a little technical about it, and you have to look at how things are priced and then hedge yourself. But you can get away with it. And that's how Nassim Taleb made his fortune too, right? Is it a fortune? I don't know if he has like a fortune per se, but he can basically spend all day in academic pursuits, right? Do options traders trade based on technical analysis? Not quite, Sam. So you might find some aberrations in the prices of options at specific price levels that the market deems significant because of previous highs and lows and things like that. But what the options traders are basing their prices on have a lot more to do with models regarding volatility. So I would call it quantitative, but not technical analysis, right? Because a technical analysis is basically using past patterns in past price and volume to try and predict future price and volume, and that doesn't work very well. Yeah, writing options is what I mean when I say like being a market maker in options. Yeah. Anyways, past price just doesn't predict future price very well, but volatility tends to cluster. So you can kind of use, say, this is what the historical volatility of this stock is, so this is likely to be where it goes here in this situation. And then if you get a spike in volatility, right, you'll realize that volatility clusters, so you're probably going to see a little bit of a spike in volatility, so you don't want to fight against it at first, but then as that goes on, then maybe you start writing options again and it comes back. Right? When VIX is high, it's good to write options. When VIX is low, it's good to buy options. Yeah. Although that can be frustrating sometimes, right? Because you get these situations where like the VIX is high, so you want to and you think that the market is going to chill out, like the S&P 500 is going really poor and you think that this is the bottom or something like that, right? Then the correct option would be to sell puts, right? To sell puts. And yeah, like that's the best option based on what the volatility is, but there's like significant risks with selling options in a situation like that, right? So I think that the buying options when the VIX is low is it better. Is it better? Or that's when I've taken options trades, so that's what I typically do. So I'm looking for a situation where the volatility is low and I think that a stock is going to pop off. And I've only taken a handful of them, but net profitable on those trades. Net profitable on those trades. Been better than the overall stock portfolio. Actually, the overall stock portfolio has not done bad. It's just the market has been shit, right? Yeah, buying call options during low VIX is probably the easiest strategy. There you go. Yeah, like the thing is for me is I don't have enough money laying around to go risking it on options, right? I'll leave that to Citadel. I'll leave that to Citadel. I mean, if I had $10 million lying around, I still don't think that I would put it into options market making. Yeah, I know exactly 12 millionaires whose liquid net worth of over 2 million liquid net worth who had to lean their houses in the last 2 years following exactly that. Sell options when the VIX is high and buy when the VIX is low. But it's the selling options part that will screw you over, right? I don't have enough money lying around to mess with day trading. Yeah, well, you know, like the issue for me is I could risk a lot more money doing this than I do. I could risk tens of thousands. I see a lot of people on Reddit and stuff, and that's what they're doing, and I always just laugh at them because they always lose the money. But what I have found is that when I really reduced the risk, and I really mean reduced the risk. So like, if I take 2 losers in a row, I'm getting nervous, right? And I don't like to have a day where I lose more than $50. Like a good day for me would be to make $50. So I don't want my average losing day to be $50, right? And that's been one of the most useful things for me, is like keeping it super tiny and having the amount of risk that I put on super small. So when I trades in micros, you know, many cases I'm only risking $10. Like if it goes $10 against me, I bail, right? Because I want to be in something where I'm predicting the future orders, and if what I did is not predicting the future orders is going the other way, then I want to be out right then and there, right? So I'm able to minimize risk, and I think that I do have a higher loss rate than I would want, but I'm getting so much out of my winners right now that have been doing really good over the summer. And so I like keeping it small. I kind of think, you know, hey, if the YouTube channel really took off and all of a sudden I was like making millions of dollars a year from the YouTube channel, I think that everybody's like gut reaction would be, okay, so now I'm going to dump $100,000 into treasury futures, right? Probably not. Probably not. I would take a portion out of it and fund a larger account, and maybe something where I could trade 5 contracts on ZN, maybe. But I wouldn't want to be risking a ton of it still. I would probably stuff a lot of it away in index funds and I would probably spend the most of it trying to build the channel to continue to be strong even into the future, right? Like I want the money that I make on the stream to go into continuing to develop the stream, right? That's what I've done. But it's gotten to the point where when we do make money on the stream, this is a frustrating thing for me, is that there are some things that I would like to do with the stream that we don't have enough money to do yet. But we do make money from the stream, and you know, so the money that we do make with it, sometimes I don't know what to do with it. You know, because what I really want to do is I want to spend money on employees. This is what I really need. But in order to pay money on employees, I'd have to get the stream to the point where I could live off of the stream alone first. And we're probably still a long way away from that. Although that video that we put out last Thursday done awfully well. I really like that. And I think I'm trying to transition into a little bit doing more popular videos here. So hopefully the channel does grow. You have to know what you're doing. Actually, there's a lot of rich people who don't know what they're doing. Most were doing the same things in the early 2000s and used to tell me these blowouts are greedy. You have to know what you're doing. Yeah, like here's the thing that you got to realize about these strategies, Evans, is you can make money from taking on a risk in the short run, right? There are a lot of strategies that will make you very, very consistent money day to day, and that can go for years, and then one day the whole account will blow up. And this is actually extremely common. In other words, you're making money from taking on risk, and the way that you're taking on risk does not account for the fat tail. Right? You're making money off of risk in the short term, and you're not accounting for the fat tail. And this is why, and a lot of really big quant firms are guilty of this sometimes too, right? So you have to have something that, hey, listen, I'm not saying that, a lot of people will say, you just have a stop limit. It doesn't work that way, I've found. Because you'll say, oh, well, I have a max daily loss, but then what happens if you hit your max daily loss 20 days in a row? You don't think that it would happen? It'll happen. I guarantee you it'll happen at some point. It's just the way that the market comes for you, right? So you really have to have like the stats to show, hey, when a fat tail comes, I don't have to make money during the fat tail, but I don't want to go bust. But what I think you'll find when you start to do those statistics is that it's a lot better to have something that has variance. In other words, you instead of having something that goes like this, and then one day it's just badoosh, you want something that kind of is more like this, and then when it comes down, you survive, right? You want more variance in your returns. And this is what Taleb talks about, right? He says you get more variance in your returns, and instead of trying to find the strategy that wins every day, get really good at predicting hard to predict events, so that when this happens, instead it's like gadoosh, and you make tons of money, and then, right? A friend did write options puts on the Dutch index and made consistent profit, but in March 2020 he lost most of it. He could not exit his positions and had to watch the market go lower and lower. Yeah. So this is another thing, because by the way, it's good to see you again. It's been a while. A lot of people don't consider the liquidity, right? that's where I feel like that this stream has a lot to offer here is once you start to understand the nature of the liquidity and stuff, right? Just even knowing, even if I don't tell you the formulas, just know like there's a way to calculate like how much volume can this market actually handle. Like based on the current liquidity conditions, here's how large your position should be to keep you safe, so that you can still exit your positions in a reasonable way. And it seems to me that there are some traders that they'll size up really big, like they're really big risk takers, and so they're able to size their accounts up really big, and that's what kills them, because they get so big that the market notices and then destroys the strategy, right? And like you could have something like, because it's not like you can't find a statistical inefficiency in the market. They do exist. They're very competitive. They're much more competitive than the informational inefficiencies in the market. So they're really hard to find. You don't want to go through all that work to find one and then ruin it by trading it too large, right? Because you traded it too large, now the market has picked up on it, and then that edge is gone forever. And I've seen so many times where this has happened. So yeah, you got to look at the liquidity and know how to size your trades appropriately. Like if you find some great swing trade strategy in the treasuries where you swing on certain pivots and stuff and it's working out for you. I mean, I've tried to find a strategy, like you're very unlikely to find a strategy that works like that, but if you did find one like that, don't trade the treasuries with 1,000 lots, okay? Just don't, it's too much. Are you familiar with the martingales? Oh, sure. Yeah, in exponential risk for linear reward. Oh, I've never heard of it expressed in that way. Yeah, you're totally right. It's exponential risk for a linear reward. Yeah. And eventually you get to the point where, I mean, the martingale betting system would always work out if you had an infinite bankroll, but you don't have an infinite bankroll, right? Unless your name is Jerome Powell. If you're Jerome Powell, do you think that Jerome Powell has an infinite bankroll, or is there a point where he can't martingale anymore either? Yeah, no, that's why I said in the treasuries. Don't come and trade ZN on swing with 1,000 lots. Market will notice. Like that's the point at which I've noticed that algorithms will react to orders. That's not doing any of my math. That's just when I watch my tapes and 1,000 lot comes in, the market always reacts to it. Nice shooting star candle on the 5-minute. Yes, I will go all in now. Oh, there you go. Well, it is a shooting star, isn't it? I don't know if you were just joking around or if you were pointing that out, but it does look like on a 30-minute bar that you're probably seeing a shooting star telling you to go short. But they're not very reliable. What's one of the things that I find really interesting is that, like, the original technical analysis, okay, like the original popular technical analysis, which would be like Elliott wave and chart patterns, was really done on daily charts. Like they didn't have 1-minute charts back then, right? No, people weren't really doing that very often. So it's kind of funny to me, or candlestick patterns is another example, right? So it's kind of funny to me that retail traders try and take that and apply it to short time frames. Like the market is very different on a short time frame than it is on a daily time frame. On a daily time frame, I wouldn't take trades based on this per se. I wouldn't use these for entries and exits, but on a daily time frame, 50, 100, and 200 day moving averages do matter. They do matter. Market reacts differently above and below those lines. The shorter the time frame, the less accurate technical analysis becomes. Yes, yes, and no. I wouldn't say that technical analysis is accurate on daily timeframes either. So let's not say accurate. I would say the shorter the time frame, the more useless technical analysis becomes. Right. But swing trading's now with Evan with swing trading. Now swing trading is a good deal. Okay, because here's the thing is that there's been so many situations like here in the treasuries, man. And I've tried to kind of swing it, but I just never end up having the guts to put on enough risk to do it. But I remember if you go back and look at my streams from the beginning of the year, man, I said interest rates are going to go higher. I remember being back in here and saying sell. And then in here, so there was one day, one of my big losses this year that really screwed me over was like here. I think that I sold on this day and then it came back and I exited out over the weekend. And then that's when this started and I was never able to like swing it out. You know, I was never able to have the guts to like just take something and hold it. Cause that was like $1,000 move or something like that. And it's done it over here too. It's done it over here too. Although I've been making money off of these from scalping it, but not nearly as much as if somewhere back in here. Cause there was some periods where there was another one where I held overnight and I made a bunch and then the next day I took a profit on it. Right. So if I was able to sort out some way for me to, you know, more effectively swing trade and hold for weeks, I would probably have, you know, tripled my account by now. But I haven't been able to do that very effectively. It always I'm too much a scalper. Right? Now I'll see the things that are going on in the short term and be like, oh, well, this must not be the right spot for the trade. Too picky. But the gist of it is this. If you are swing trading, you're substantially more likely to make a profit. That doesn't mean that you'll have alpha, which is to say you won't make more than if you would just buy and hold the instrument that you're trading, but you're a lot more likely to actually make money. So swing trading makes a lot more sense than day trading. They postponed the launch of the MBS futures from October to until further notice. Oh, why? How would you trade UB without order flow? Well, so again, I want to point out there's really like four components here that you want to have all together. Okay, as part of, you know, like when you're watching television and they have cereal commercials, you know, and the kids are chasing some animal, and then at the very end they say this cereal is only part of a complete breakfast, right? So you got to take that same approach in trading. Okay, so order flow is only part of a complete trading strategy. Okay, so you want to have order flow, you want to understand correlated instruments, you want to have predictors of order flow, right? Those are the three things. And then I guess number 4 would be risk management. Thought there was another fourth one, but I think that the fourth one is like, for me, is just kind of like the timing of things. But that's, you could put that under order flow, right? So when I have a piece of information that helps me predict the future orders, and I can see the current liquidity conditions are conducive to my trade, and I can see the correlations going in line with what my thesis is, then I can take a trade, right? What are the best times of day for ZB? Well, so when I'm talking about timing, what I mean is this. If there's been a big move, like there was a really impulsive, like a piece of news came out, there was breaking news and the market moved really heavily off of it. I might wait to trade it for 45 minutes, right? Maybe if it's not like that, maybe if it's just, you know, it's a quiet day, but there's some block buying in it, it does end up being one of those trend days, but it's like a sneaky trend day, right? Right? You had this initial move up and then it stopped and everybody's not sure, is it going to continue up or is it going to go back down? But you know that it's the end of the month or whatever the deal is, and so it's likely to continue going up. I'm going to wait 45 minutes. I'm going to wait 45 minutes to put that in. That's what I mean by timing. Because that's roughly how long it takes for the liquidity to heal. Also, you also want to consider like the timing of the news events, right? So there's typically the big releases are at 8:30, right? Then you get like the 7:15 time period where people start to take trades ahead of the S&P 500 open. So that's an interesting time to take trades, and a lot of my more successful trades happen in there. And then there's also a mean reversion period around 10:30 Eastern time when a lot of reversals in the S&P 500 tend to originate. And then after that, after about 11 o'clock, 11:30 Eastern time, it depends on the time of year though, but the London market closes and then activity dies out, especially in the treasuries after that. So those are kind of the key times that you want to look at. And then I guess if you're trading ES, the last hour of trading is an interesting period to look at as well as 2:30 Eastern time. So if we're having a really bad down day, pay attention to 2:30 Eastern time, because that's when the stockbrokers send out their margin calls. So you often see a lot of selling after that. Other than that, I don't know what else you would do in ZB different from ZN. To be honest with you, I never had very much success when I was trying to trade ZB as compared to ZN. ZN does seem to be much more responsive to the order flow. But that might have just been because you got to take more risk in ZB. It sucks, but. I need to go back and check. Now, seeing that comment from Akshay again. I need to go back because there was like a survey about your knowledge of futures that they were sending out that I probably should take. The mortgage-backed futures was kind of exciting to me, but I could see why they might maybe not do it. A more open market with mortgage-backed securities might not. We might not want to know what's going on under the covers there. You know what I mean? It was kind of like, you know, during the financial crisis, there were companies who were accessing the Federal Reserve's discount window. And everybody's like, well, if they're accessing the discount window or they're bailing these companies out, we should know who they are. No, you don't want to know. I promise. You don't want to know who it is. Okay. Okay, Futures Trader 71 pointing out 10 minutes ago that the ES roll does appear to be complete. So, volume reads over there, that should improve those, right? Yeah, or then thinking about like, so this whole thing about like futures, like order flow is only part of a complete trading strategy. We need to make a video about that, I feel like. But need to make a video about that. I think we need to make a video about correlations and specifically as it pertains to Forex. I feel like I still don't know a whole lot about the connections between currencies and interest rates, other than that, you know, the better the interest rate is, the better the currency tends to do as people come over and buy it, right? But that the correlation is like an important part of this, right? So we should have some videos about that as well as a more economics level video about the treasuries that I've been talking about. But that video last week was so good. I really want to do for my next video, and maybe I can get it done as soon as Monday. I really want my next video to be why price action sucks. Because I think that might really help the channel out. It's either that or people just really hate it and start reporting the channel or something. I don't know. I think we're getting close to the top, and if interest rates before the Fed sends us deeper into recession and rates drop to near zero sometime next year. So the thing that I find really interesting about this movement this week, Evan, is that it was a really, really dismal, bad day that day. I've actually seen some positive things in the market since then. Like, yeah, core retail sales bad, but like it's not that bad. Some things are actually improving. We've dodged a couple of bullets here. I'm not completely convinced that it has to be a complete disaster yet. That makes sense. I'm not completely convinced if we have to be at a complete disaster. But the other thing is that like the interest rates here in the treasuries overall didn't go nearly as high as I thought that they would either. So like they're saying terminal rates 4% and you're a little bit higher, 4.5%. But the 10-year isn't buying that. Even the 2-year isn't buying that, actually. Right? It seems to me that what has changed instead of the market saying, or rather, how do we put it? It seems to me that after the CPI, the market's expectation of the terminal interest rate hasn't changed, but rather they just think that maybe November will be a 75 basis point hike too. Yeah. I don't know. Here's the thing. Oh my gosh. I don't know if I should talk about this, but I've got to talk about this. Sometimes people on TikTok drive me crazy. Like I just don't. Guys, explain this. Why is everybody that comes here to the stream and interacts with us on the stream is so effing smart? Like I've literally got some of the smartest retail traders in the world here in this stream. That's really is the facts. But then when you look at like the YouTube comments or especially the TikTok comments, is just the biggest idiots. I don't get it. So there was this, I made this one video about how the models are all wrong. So the issue that we've had here is that the predictive models that people are trying to use to predict inflation are a bunch of nonsense. Well, they're not a bunch of nonsense. I mean, they're useful. They were not intended to necessarily be super accurate models of the trajectory of inflation. That's why the Federal Reserve will come out and they'll say, well, here are what our own projections of inflation are, but we know that this model has limited utility, and that's why we really need to see indications in the real data, like the CPI data, that inflation is coming down before we start to back off on raising interest rates, right? Not like so they understand the limitations of the model. And this guy on TikTok started arguing with me about it. He's like, well, the rational thing to do is to still use the best model that you have. No. No. Listen, you have some model that tries to predict CPI or that tries to predict inflation, okay? And that model is not very accurate. Should you be placing trades in the treasuries based on what you think that CPI is going to be? No, you definitely shouldn't, right? You list it down as is a risk that you can't control and that you have limited knowledge about, and hedge yourself accordingly. This is why here, a lot of the time, what we do is we wait for the news to come out and then we trade that, right? I couldn't believe this guy was arguing with me about that. I just couldn't believe. I was like, he must not be a trader. Like he must not be a trader. He seems like he's just trolling the stream because he's a liberal. But I not the stream, the TikTok. It seems like he's just trolling the TikTok because he's a liberal. But I couldn't believe that anybody would even argue with that. It was just like, what the heck? I run into that all the time. It's not like, oh, I've just had this idea about the way things are that, maybe that's wrong, right? No, it's like, this is like a very easy to prove thing. Like if you use that model to try and trade CPI, you're gonna lose money, right? They call it TikTok because it's a minefield. Me. I mean, I have had success on TikTok, but it hasn't really flown over here to YouTube or success in anything else, right? I think that the primary advantage of TikTok is being able to quickly test out different messaging, right? To see, okay, what gets people's attention at the very beginning. So I'll go on and make a video about a certain subject, and then, if that subject does well or it doesn't do well, then... So like I've noticed something, and maybe this is another thing, like one we're making. I haven't seen it yet, but we want to make some video about like oil market dynamics or fundamentals, right? Because those videos on TikTok do very, very well. Have you ever heard of the Dunning-Kruger effect? Idiots are very sure of themselves. Yeah, so I don't know if I want to get into that at the moment. Today was the trade to trade natural gas with rail workers. Oh, oh my gosh, live action. I wish you had said something about that like 2 days ago. Now I realize. So like natural gas was up big yesterday. And I'm like, oh, okay. I mean, I know there's stuff going on in Europe with natural gas and everything. And I know that this is the US natural gas contracts and everything. But I don't understand why it's up 5%. And now I'm realizing I should have known. The reason is because they transport natural gas by rail car. Cool. So that's why they're recovering on that today. I think that's probably a really good theory for how to... I would need to go through and see how much of the natural gas market runs by rail as opposed to pipeline. But that's a really good theory. Oh, we got 30 minutes. So here's the thing with Dunning-Kruger is that I think that people misinterpret the results of Dunning-Kruger. I think that what Dunning-Kruger was, what the original researchers were trying to say, their conclusion, wasn't that stupid people tend to be more confident, but that less confident people tend to be smart. That being less confident makes you smarter is what I would say. Does that make sense? It's not. I don't think that they're trying to say that stupid people are more confident. I think that what they were trying to say is that lack of confidence generates intelligence. In other words, if you're not confident about things, you're going to put more effort into it, and you're going to work hard, and you're going to exercise your brain more. And so you build those neural pathways that allow you to do that analysis and stuff. And then that's what makes them smart and what makes them more competent. They become more competent because of the lack of confidence, not the other way around, right? But it could also be, it's probably also the case that the more competent you become about something, the more you realize you don't know. I mean, that's certainly the case in futures, right? I really think with the style of trading that I trade, with the style of trading that I'm teaching here, am I really teaching it? I don't. The way that I trade, the biggest key is realizing what you don't know, because we always want to come in and think, oh, I know exactly what it's going to do and everything. Look at this today. I didn't take a trade. I gave all sorts of reasons why about what the liquidity was doing, and the reasons why I thought it was moving at the time, and why I didn't think that those things would tell me a whole lot about how it was going to continue to move. And like, look at this. I mean, if I had traded this, maybe I could have gotten lucky, but I'm going to bet you I would have lost money on this today if I had traded it. It was a good decision for me to not trade it. No idea about 2022, but until 2019, about 5% of total natural gas was transported by rail in the whole of North America. So that doesn't really explain the spike in natural gas then, do you think? You could have easily lost money today, yeah. And the thing is that the range here is in the treasury has been wide enough that it would have been a good chunk, right? But it probably could have lost $40 today if I traded it. It's better to have edge. It's better to know what's going on. I don't know, like it's funny because as you say that, like, okay, here's the thing. There's those big gas tankers on a train. Liquid Natural Gas by Rail 2021 by Harvard. Quick take. In November of 2021, the Pipeline and Hazardous Materials Safety Administration released a proposal that would halt liquefied natural gas transport by rail. Why it matters. I don't know. That didn't tell us what I wanted. I guess there's all these rules about they're talking about rules because they're worried that there would be a disaster on it. It seems to me, based on how these things are going, that like they're probably trying to reduce how much natural gas is being transported by rail. It's still possible that that strike could be responsible for the spike in natural gas yesterday, but I'm not sure. Live Action seems to sound pretty confident that that's why. So, I don't know. Good thing for me, I don't trade natural gas. Maybe if I traded natural gas, I would know this. By the way, oil's cratering this morning again. I mean, when we started this, it was down pretty good, and we're like at 86, and now they're taking another drop at 85, and I'm thinking that that's probably going to show up on a couple of people's radars. The S&P 500 also falling bound below 3950. Oh, hey, you know what? You always find a reason afterwards, right? Yeah, You know, it sucks that you can't always know what's driving a market at the moment, but I think it's really important to go back and understand why something moved, because that can kind of tell you next steps, and it really helps you understand the sorts of things that do move the market. So we always do want to try and find out why. So I'm just realizing that we've had this poll going the whole time. So how did it go? We've had 23 votes. So that's a lot of votes. Man, why did you all voted in the poll, but you didn't click the like button? You should click the like button right now. You guys are great, actually. 57% of you said that it will be below $39.50 in a month, and 43% said above $39.50 in a month. So I thought the reason I did this poll is because I thought that you guys would come down on the side of I misspelled below. That's hilarious. I thought that you guys would come down on below, but it was actually a lot closer than I thought. 43 to 57. Do you ever look at wheat and corn? So I don't follow them closely, but I do have them on my watch lists, right? So like I don't have the wheat one up, but soybeans and corn are like the best performers right now. Let's add that to our watch list here. Instruments list, complex, and wheat. ZW. Okay. Yep, I think it's ZW. I'll add ZW to the list. Well, it's just kind of in the middle. So today, corn is the biggest performer, up 0.7%. Natural gas is the biggest loser, down 8%. So that means that they are really... Let's come back here and look at it on our chart, because I do have a chart for it. I believe I have a chart for it. Yep, natural gas right there. Ooh. Yep, the whole day smashed. So here's the thing, though, is if that was because of the strike, wouldn't that have been earlier? Because I remember hearing about stuff about that on Monday. Well, whatever. Oil is the next biggest loser, and those are all really big, and then you get into the metals and stuff. Overall, though, I mean, it is 0.5%, so it's not too big. Yeah, we have to see how the S&P 500 turns out here. Like they did make a push at those lows there, didn't break yet, so we'll see. They may yet in the next 20 minutes do something, huh? Cali rice harvest is not a Midwest corn, should be below average. Ukraine exports are minimal. Grain should only be going up in price. Yep. Probably should have invested into corn at the beginning of the year. So like the whole thing was like, okay, like it does seem like we're having inflation, so I want to be a long interest rates, so I want to be long banks, and I want to be long oil. Then oil popped off and I took profits before Ukraine invaded, but I took profits. But really, the right call would have been corn, right? And I guess if we come into 2023 and like I'm still seeing stagflation, that is what I'm gonna do. Is I'm gonna go into corn. I don't know if now is the right time to get in on a trade, though. It's up there. I guess also some of those commodities did come back a lot, right? You know, one of the things is like part of our branding was traders gonna trade. We got the mugs because that's what happens. So sometimes, why does the market do what it does? Sometimes it's just about that traders gonna trade, right? Now, I would recommend not trading without a good reason. Okay, but the reality is traders gonna trade. And I think that that's what we got going on today. I don't really see a very good reason for markets to really be making any kind of decisive moves. There was a big move up and then come back and now kind of going flat in the treasuries, and I'm really glad that I didn't trade it. Trader's gonna trade, but the reality is Sept didn't trade it, so maybe we need a different catchphrase for the stream. Maybe it should just be pandas. You know, I've always been into dragons. We can make the channel dragon thing. I don't think that would make much sense either. I don't think that would make much sense either. You know what I do need to do though? Something that like I could pay for this and I just haven't found the person yet is really what it's about. I want a technical analysis is astrology for men shirt. I think that would be awesome. Yeah? Oh, you got some free AM reports on the grains? I would like to see that. So something that frustrates me, News Squawk does a good job. Okay, News Squawk, they've got a morning thing that really gives you a good idea of what the overnight news was for the major macroeconomic news. But what I haven't seen that I would like to see is better reports for specific commodities. Like, there is definitely things going on in the copper and the corn and where else? I guess copper and corn are the two that I'm most interested in. But if I had morning reports to read about what was going on in those markets, I would really love that. And in the treasuries, like, there is definitely information out there available specific to treasuries that like we're not getting, particularly like how much corporate issuance there is that day. That's going to be a key. That's one key thing, key driver of order flow that I know is out there that I know I'm not very aware of, don't have good sources on. Should have believed the shooting star. Yeah, it did go down. Well, so I never looked at it. So let's come back to the chart here and look at it on ES. Was it actually a shooting star in ES? No, it didn't show up as such in ES. Maybe on a 15-minute chart, because you can see here on the 5-minute chart. If I zoom in on this one, I don't know why I have this one zoomed so far out. I'm being so silly. Yeah, I mean, I guess you could call that one a shooting star. And there was another shooting star. It was kind of having trouble holding up there. But like, here's the thing. For all we know is after we shut the stream down, the S&P 500 is going to test that up there again and bust right through it and have a really strong trend up day. And you just never know what they're going to do over there. I feel like, listen, if you're going to be a noise trader, like I said, there's informed traders, there's market makers, and there's noise traders, okay? Typically, you want to be the informed trader. The informed trader is the way to go, I think, if you're a retail trader. But if you insist on being a noise trader, or you just figure that being a noise trader is just the best chance that you have, ES is probably the place to do it, because there is a lot of randomness in the equity index futures. Mark Eisner says, word? What do you... I'm already feel behind. Listen, you gotta realize I'm not the best on picking up on social cues or like, you know, inside joke sort of. So yes, even if it was like something I just said and you're responding to that, sometimes I don't get the joke you guys are making. Not too quick on that sort of thing. I wonder here. It is, in fact. So during this move down in the S&P 500, Bitcoin went with it. Dude, if Bitcoin, oh, actually it was a drop below 20,000. Okay, let's say if Bitcoin made a new yearly low today, that would be so funny. That'd be so funny if it made a new low for the year today on the day that Ethereum goes live. Happy day for PC gamers. Do you think that the video cards are just going to flood the market now? I'm watching it. I mean, I'm kind of thinking that I get a 40th series card, but we'll see. Maybe I just get a 3060. 3060s are like $200 right now. 3060 Ti, 250, 300 maybe. What's this? It's not this on Dow News. Go to site. Liquidity in the U.S. Treasury market represents the biggest systemic risk to stocks since the 2007 housing bubble, says Bank of America. Oh, actually, I saw this. Yeah, like a week ago. Yeah. Well, I think that Zero Hedge said something about it. But you know what? Here in September, things have gotten better. Things have gotten a lot better. Like, okay, the liquidity did come back. Where instead of putting 1,000 on, we're putting 1,500 on. So that's one thing. But like, the latent liquidity is definitely better. Like, there's just a lot more trade has been going through these days. So I think it's improving. Of course, if like we have a dumpster fire, if we have like some sort of systemic risk, you know, government has to come in and save things, go on next year, right? Because that's what they're basically saying, right? Is the Federal Reserve is going to go too hard and then something's going to break. Okay, so if something breaks, would that be a problem for the treasuries? Well, here's the thing. If something breaks and we're still in like a very stagflationary environment, that could be a problem, because if the treasuries have to continue to sell, that's going to be ugly. But that might not be the kind of scenario we're talking about. The kind of scenario we're talking about is more like, you know, the Federal Reserve has to buy treasuries and all these things. That's going to improve liquidity, right? When the government gets involved and they're buying it up, that's why the liquidity was so good for the last 10 years. So I was really worried about it for a long time, but over the last week or so, I've kind of chilled out about it a little bit. There are people on the Ethermine Discord asking. I was going back about, you know, before we end to see if there's anything else we can say about Ethereum. So apparently some people that were mining didn't know that it was coming. Now it might go up, down, or sideways. I'm not getting a whole lot of informational content from the cryptocurrency guys on Ethereum. I guess that we're in like one of those, like, everybody expects something to happen, but like, why would it? You want to buy Bitcoin now because the Ethereum merge happened? Well, probably. I think you would want to have bought ahead of the Ethereum merge, right? Yeah, oil is not looking good, does it? Listen, I hope the Biden administration gets their $80. I really do. If they do get their $80, maybe it could go even lower, and then that would be good. But just next time, Biden. It's not Biden. It's whoever is in charge over there. Don't tell everybody first. Keep it to yourself. You're too big. That stuff can't be public. Just keep it to yourself. So let me do a little refresh here. And a recap. So first here on the recap, just want to make sure you guys, hey, click that like button. It does help the streams out. And make sure that you're subscribed and click the bell icon so you don't miss future videos, because this is the kind of channel, you follow my channel, you probably want to see every video, and you probably want to see the live streams when you're here on this in the morning. So I would recommend having bell icon clicked. Also, I have a bunch of links in the video description. So I have links to the software that I use. I have affiliate links for that. I have affiliate links for the News Squawk, which I'd highly recommend you have a News Squawk. And also for the mugs. And then my indicator suite. So if you use a NinjaTrader, I'd highly recommend getting my indicator suite so you can have things like dollar index and spread charts and so forth. All right. So let's see what we did today here on the charts. So again, the biggest loser, natural gas. Coming back over here to the chart, natural gas. It was up big yesterday. And it's just coming all the way back today quite quickly. And it looks like they're going to go a little bit lower. Also, oil taking a hit here today, dropping back below 85. We'll see if they head back towards 81 or how far they make it today. But it's not looking so hot for oil. And that may be in part driven by some apparent weakness in the equities. I mean, it's not too significant, but the equities are moving down. And the treasuries, well, we had a little bit of upside pressure here in the treasuries, but the reality is that the treasuries didn't really move too far away. So the SPOOs are barving right now. It's getting worse. That's basically the gist of what happened here this morning. It's kind of nothing too significant, but there are some assets moving. And maybe the ES does want to try and continue on from the selling now. Watch the rail strike. Well, remember that the rail strike, that they apparently did broker a deal. Listen, I don't know a whole lot of stuff about unions, like how likely it is that the union workers would vote yes, but I think that the union bosses wouldn't have made a deal that their workers wouldn't like, right? So I'm going to guess that the railroad strike will be averted. So there we got that. Oh, and then, you know, I didn't mention, but well, I mean, I mentioned it, but I didn't go deep into it. Bitcoin is seeing a little bit of sell pressure. We'll see. There is yesterday's lows from 19,585. So let's say 19.5, and then below that 18.5, and then you're starting to get into more like panic territories or stuff. Oh, what's this? Nick Timeros. Stamps really don't mean anything to Janet at all, says her brother John Yellen. That collection is basically forgotten. It's sitting in a safe deposit box. I guess at some point it will be passed down. Wait, what? Foreign diplomats think Janet Yellen is a big stamp collector, and so they gift her special ones. Rishi Sunak gave her a $10 stamp from 1993, the most valuable stamp ever issued by the Royal Mail. But she actually digs rocks, not stamps. What? So note to self, if I ever get the chance, I would love to meet Janet Yellen. I think she's a smart person. I do not get what is going on with her in the Biden administration. But whatever. Dude, that is a funny and cute note there by Nick Timeros. And Michael J. Berry showing off his guitar today, I guess. As the market falls apart, will they break yesterday's low at 39.29? Find out in 5 minutes, or maybe not. Maybe we can't. Maybe we have to leave before it does it. Listen, if I ever become some sort of famous person or dignitary, I don't ever see myself being a person in a public policy position or anything like that. But if it ever happens, and you know, I'm in a position where people want to give me gifts all the time, I want it to be known that I like dragons. Okay, that's what you should get me, is dragons. So, can you imagine getting stamps and you don't care about stamps? This is so funny when that sort of thing happens. Oh yeah, you're right, live action. Options expiration tomorrow. Well, but that's kind of why I'm kind of wonder, like, can they really get too far away from 39.50? We'll see. I'm gonna be a little bit worried about what happens on Monday though, right? Maybe this is like, let's just kind of drift until options expiration, and then on Monday everybody goes short and we go down to the yearly lows, right? Bloomberg Crypto tweeting that Bitcoin erases its gains. Yeah, you keep an eye on Bitcoin today. If there's like a big sell, I'm seeing a lot of things in the market sell at the moment. So gold is seeing a sell now. That is the first time in a very, very long time that I have seen gold move all by itself. It's about a $20 decline. They're into the 1600s now. Yeah, and it's kind of accelerating at the moment too. But the treasuries aren't doing anything right now. It seems like it's falling in concert with the S&P 500. I wonder if that's like a margin call or something. Yes, I'm here every day starting at 8:30 Eastern time. Every weekday, rather. And I've been here, like I said, just subscribe and click the bell icon. Makes it a lot easier to find it. Or I have in the video description, there is a permanent live stream link, and just like bookmark the permanent live stream link. I've been here for every day for the past 5 years, and I will probably be here every day for the next 20. I hope. So, but it's time for me to get going too. I do the day job. Why don't you stream on the weekend with cryptos? That sounds like a nightmare. Yeah, it's been 5 years. Can you believe that? We started in 2017. It's been real. Today was fun. We had some good discussion today, didn't we? Didn't get into anything too controversial. I did. You know what? We changed the thumbnail, and it has been helping a little bit, I think. I need to promote my channel. I don't know what to do, to be honest with you. The only thing that I know of that really seems to move the needle is making good videos. So that's what I'm gonna continue to work on the most. Gonna do a what? Probably not. Maybe I'll go to Taiwan for a week next summer, you know, like this. Actually, we got to do something for fall break. I don't know what we're gonna do for fall break, but I got to do something for fall break. Well, I got to get going, so I will see you guys tomorrow for options expiration. In the meantime, stay excellent, team.